Aloha, everyone, and welcome to Java. It's Monday, October 30th, 2023. I hope everybody had a great weekend, and I really appreciate you being here. So, I want to get into the markets first, and we'll talk about a couple of other things afterwards. We've got our favorite indicator up, the MMRI, clearly in extreme territory, still above 320. And it seems like this is kind of the new area where it's going to live right now. It's just kind of waiting for that straw that's going to break the camel's back. We're kind of watching for black swans. If it kind of normalizes here and takes its time, it's consolidating, it could go higher. We'll see what happens. But the two main elements of this, the 10-year yield and the relative strength of the dollar. So markets corrected. They sold off pretty well last Friday as well as some on Thursday before, and a little bit oversold. So it looks as if there could be a bit of a bounce today. Futures are green at the moment, and some of that fear trade has kind of come off. So the VIX has retraced a bit. Gold is still over $2,000 per ounce. And oil has retraced because they're talking about less worry about the war using up all the oil, so they've still got supply. But I think it's going to settle here for a little bit and then continue higher again, because war will drive that price of oil higher, even though it's in a uh, temporary little drop here. So the sentiment right now is neutral. Everybody's pretty much holding their breath until Wednesday, because that's when the Fed meets and makes their policy decisions. So tomorrow we've got the Bank of Japan is making their decision. We'll go over that. And people are still hoping for the Federal Reserve to cut rates. That's not going to happen this year. It cannot. They've got too much going on. And not only that, but they make money by keeping these rates higher. So there is no incentive for them to cut. They may pause. They may still hike quarter of a point. We'll see what they do on Wednesday. At any rate, I think a good portion of this is already priced into the market, and they don't want to shock them. So for today, there's not much going on. We've got some news from the UK bank HSBC, and we've also got McDonald's earnings coming in, but I expect a relatively quiet day that could be positive for the market on the short term. In the long term, we're still in a downtrend, and we're going to remain there unless something major happens. We've also got all of the war stories and headlines going on, and that causes turmoil as well. So for oil, I had a viewer bring this up because we had brought up how they were laughing about peak oil prices. And they brought up that peak oil was basically supply, but that's what it was in relation to back in the 70s. And I think they're using the same terminology by design so that we think back to this time of the 70s, so they can kind of pull the wool over the eyes to make people just say, oh, yeah, well, this might get as bad as the 70s. And I think in reality, we've got much farther to go. So found another story, and they're relating the same term, peak fossil fuel, to demand. So they're saying peak demand, which means basically peak prices, which is what they were talking about, which is the opposite of peak supply, which would increase prices. So anyway, I think there's all this psychological stuff that they play with us, all of the basically major marketing. So with banks and central banks, there's major trouble with the debt. So the US Treasury are boosting their auction sizes because there's no buyers. So the deficit is getting worse. And so yields are rising because they have to pay people to take this debt risk. There's a rise in risk. So they must increase the amount of money so that people are willing to take the risk. So this is just showing how shaky the markets are. And this is the Federal Reserve's benchmark interest rate. We're at 5.5% is kind of basically they're at their target that they want to hold. So back to that story about HSBC, they had large profits and they announced a $3 billion share buyback. Well, there's a little more to the story, of course. So they have major Chinese shareholders, and this group is kind of pushing them to break up this UK bank. So they're trying to buy back their shares. This is giving their shares a temporary boost, but on their balance sheet and their actual underlying, they're in a lot of trouble, as well as just like Bank of America and Wells Fargo are in the United States. So we'll keep an eye on that. As I said, Bank of Japan is making their policy decision. It's actually tomorrow, not next week. And then with the same thing, they've also got a problem with their debt. Nobody wants to purchase their debt. So the Japanese government bond yields are also going to fresh highs. So people are kind of looking at taking their money from the stock market now, considering putting it into these treasuries and bonds because they're paying higher dividends. So anyway, in the market, treasury markets brace for a seismic SEC rule. This is not even getting any coverage, and this is going to be huge. So this is a new Securities and Exchange Commission rule. Basically, it's regarding the treasuries market. And what it's doing is the short-term financing repurchase agreements. Basically, they're creating a central clearing house. Okay, what that does is that is kind of cutting out the competition, because it is assuring that the Federal Reserve will be the buyers and lenders of last resort. Because right now, hedge funds and private buyers can go into this, but if they set up this basically clearing market, central clearing market, it will cut out these other buyers. So I don't know, they're saying that it could take anywhere from 8 months to a year before they make this ruling. But if they do, this could be huge, and it's just more control. They've never done this before. So anyway, on to the real estate, and you've probably seen this story, is Evergrande. So they have to come up either with a restructuring plan, they're in courts right now, or face liquidation. So they decided to move this to December 4th. This is going to have large repercussions for actually globally for the real estate market, and then kind of filter out from there. Liquidation would mean they would have to sell a large portion of the assets for basically pennies on the dollar, and that could have far-reaching effects. So we'll watch that. So right now, as far as markets, this is pretty much what it's like. They're waiting for the Fed decision. We've got both sides traders trying to see which way it will go. I don't think there's going to be a Fed pivot with rate cuts. However, I do believe they'll hold. There is possibility they will hike a 0.25%. We'll see. The European Central Bank has already decided to hold, and Bank of England will be making their decision on Thursday. So with this, I would like to bring up a couple of other things. You're getting bombarded with war stories, so I haven't brought an awful lot of that up. There's a lot of controversy over this. There was an airport in Russia that was raided. They had to shut it down because local people and protesters were looking for Israeli people since the flight came from Tel Aviv. So I think it's very sad that this much hatred and division has been pushed by these groups, and that is their point, because as long as we are divided, they have control. So I just want to urge a little compassion and to remember that we are all humans here, and that's not our fight. Anything that they can do to divide us, they are. So now we need each other more than ever. I want to thank you all as a community. I don't want to keep going on about this, but it's just so incredibly important. So thank you all for being here. We'll try and spread this as much as we possibly can. And if you would just, leave some comments, leave a like if you would. I appreciate you all. I wish you a great trading day, just a wonderful day in general. And until I see you again, my friends, stay free.